My name is Francis Wedin, and I'm the Executive Chair of Vulcan Energy Resources, which is an integrated renewable energy and zero carbon lithium company focused on developing the zero carbon lithium project in Europe, currently a renewable energy operator. On the line with me today is Managing Director and CEO Cris Moreno. Cris, say hello.
Good morning, good afternoon, everyone.
And well, welcome everyone. Thanks for your time here today. Just a bit of formality and housekeeping here. There is a Q&A function for those of you who haven't joined us before. It should be in the bottom of your screen. If you have any questions, please feel free to type them in there at any time during the discussion. Just in the interest of time, I think Cris and I will get to those at the end. We'll just provide a bit of an update first, but feel free to chip in with your questions at any point and we'll endeavour to answer them at the end. So please use that Q&A function. In terms of today, we wanted just to give a bit of an update on a few things. There's nothing sort of materially new here, but we wanted to just provide a general update on how the project is progressing, how the financing is progressing. We wanted to start off with talking to the EIB announcement from last week, which was really good news, and just talk about what to expect in the coming weeks and months, because a lot of things are going to be changing with the project and the company in 2024. A lot of exciting things ahead. So just wanted to touch base on that front and go through a few things. So we'll talk about financing. We'll talk about our optimization plants. We'll talk about public funding as well. And we'll also talk about other things such as the technology arm of the business and the pipeline of projects ahead of us as well. So without further ado, we'll get going. I just wanted to start off with a 2-minute overview. And Cris has already told me that he thinks there's a lot to talk about with this slide. I agree with him. I think this slide, once again, there's nothing new here, but I think this slide provides a really good representation of the business. And I'm always conscious that with these update calls, there's always some people who haven't heard about us before, don't know us. So I just want to provide a very, very brief overview here, just a 2-minute snapshot of what Vulcan is. So Vulcan is dual listed on the Australian and Frankfurt Prime Standard segments of these two stock exchanges. We are currently a renewable energy producer from the Upper Rhine Valley in southwest Germany, bordering France. So we're producing renewable power, baseload renewable power from our operations at Insheim as we speak. And there's a long operational track record there on the geothermal side. What we're doing, the main core focus of the business is developing what we call phase one, which you can see on your screen, phase one of the zero carbon lithium and renewable energy project. So this is an upstream and a downstream integrated energy and chemicals. In the upstream, it's the geothermal renewable heat and power, not just power this time, providing renewable heats to local communities and businesses in the Landau region, and also producing a lithium salt from the same deep geothermal brine source. So we're pumping the hot brine up to the surface, we're producing energy from this brine, we're feeding it into the local communities. We're selling power to the grid, once again, from that same heat source in the brine. And then before we re-inject the brine, we are extracting lithium salts out of it using our proprietary Vulsorb adsorbent, which is based off commercially proven technology, which has been used for over 25 years in the lithium industry, but has been optimized using our own in-house technology. So we produce a lithium salt concentrate and we produce a renewable energy from this product. We then send the lithium salts, the lithium chloride concentrate, to our lithium hydroxide plant, a central lithium plant, so-called CLP, where we use electrolysis, so essentially green power, to produce a zero carbon lithium product at the end. So 2 products, renewable energy, which breaks down into heat and power, and zero carbon lithium hydroxide, which gets sold to our local consumers in Europe. this is phase one, and out of phase one, we'll be producing a good deal of geothermal heat and power, and also 24,000 tons per annum lithium hydroxide for the automotive electric vehicle market in Europe for our customers, including Stellantis, Renault, Umicore, etc. That's phase one there. We also have a funnel of future phases as well. So we have a number of project areas which are being developed in the background in the Upper Rhine Valley. The Upper Rhine Valley is the largest lithium resource in Europe by quite a large margin, and we are the largest license holder in this resource field. So we have a very large resource base, and we're not resource constrained, so we have the ability to expand and add further phases of production in the upstream to add further trains of production in the downstream. So we can grow in a modular manner as the market in Europe grows as well. That's the project developments, execution, and operations side of the business. Also worthy of mention as well is that Vulcan has a very strong technology arm in the business as well. So we've been talking about our Vulsorb lithium extraction adsorbent. So this is using aluminate-based lithium extraction adsorbents of the kind which were invented by Dow in the 70s and have been used since the 90s commercially in the lithium industry. And this method of lithium production is very efficient, it's very sustainable as well, and it's very quick. And you produce much higher recoveries than with legacy methods. This particular adsorbent that we've developed, though, although it's based on the same technology, it is optimized and improved relative to what's available on the market. So we believe it's one of the most highest performing adsorbents out there for lithium extraction. And we're getting quite a bit of unsolicited interest to apply this technology elsewhere in the world. So we're looking at capitalizing on this and actually growing our technology arm of the business as well for lithium brines elsewhere in the world. And these can be brines like ours with the geothermal heat source baked in, or they can be more traditional sort of solar types as well. So we have the technology arm of the business, and that's serviced by Vulcan Labs in Karlsruhe. It's serviced by our pilot plant team, our technology team led by Dr. Stefan Brandt. We also have the well delivery, the geothermal drilling and well delivery arm of the business as well. So that's called Vercana. There's a tremendous amount of well drilling and execution expertise within Vercana, very sought after team. And this also has 2 rigs in the company as well, 2 electric drill rigs, essentially onshore oil and gas rigs repurposed as geothermal rigs. And both these crews and the rigs themselves are in very short supply in Europe at a time when Europe is going and Germany is going all in on geothermal project development. So these are, Vercana is also a strategic asset to have within Vulcan. And whilst we'll be very much focused on executing our phases in the Upper Rhine Valley, is also a strategic asset for the company going forwards. So that's a bit of a snapshot. You've got the current operations, energy. You've got a growing project execution play here for phase one, integrated lithium, chemicals, and renewable energy. You've got the pipeline of future phases from that very large resource. You've got the technology, and you've got the well delivery all within Vulcan. That was a bit more than 2 minutes, but just wanted to provide a bit of an overview there. Cris, anything to add there from your side?
No, I will summarize. It's a lot to offer. It just needs to be understood as well. So well presented.
Thanks, Cris. So now that brings us to some of the recent news we've had, which was on the European Investment Bank. And essentially the news was that we have passed the first part of the process, the first stage of the process, to obtain financing from the European Investment Bank, debt financing, as part of our phase one project financing process. So this was a very positive signal. It was for 500 million, up to 500 million euros of funding. Now, the final amounts may be different. Obviously, it depends on what our final financing mix looks like. But this sends a very, very strong signal from the European Investment Bank, which is the lending arm of the European Union. And this is really starts to show that the rubber is hitting the road with regards to the European Union really backing financially critical raw materials projects for the battery and the electric vehicle market in Europe. Now our phase 1 financing, so when I showed you on the screen there, the top of that funnel, that first project off the rank of the zero carbon lithium project, our phase 1 financing comprises a debt component and an equity component. So we're raising roughly 65% of the total capex amount. Without financing costs, that's about 1.4 billion euros. With financing costs, about 1.8. We're raising about 65% of that as debt and the balance as equity. And we're doing this both at a phase 1 project company level, so not at the Vulcan level. The European Investment Bank financing would be part of that debt side, and they now enter into the debt financing process along with the other banks who are export credit agencies and other organizations who are part of that process. So we've been through a market sounding last year. We've had very, very strong support for the debt financing from commercial and development banks, from export credit agencies, including from France, Italy, Canada, and Australia, among others as well. And now for the European Investment Bank to come into this process as well with such a strong statement, over 800 million Australian dollars for those of us joining in Australia. It's, as far as I'm aware, it's the largest support that an Australian company would have ever received, if that concludes with that full amount. And certainly in this space for Australian listed companies in the lithium sector, it's very much up there in terms of the amount. So very, very pleased that the European Investment Bank has backed us to this degree. Now, obviously, this is part of a longer process. There's a due diligence process, sort of a longer due diligence process that's ahead of us. There's a number of hurdles still ahead, and the debt financing process we expect really to last until the second half of this year, probably really until it completes the back end of this year. So there's a ways to go yet. There's a process ahead of us, but we understand that this first step of the process with the EIB was the hardest to get through. So now we're in this process with them. We understand that the main hurdle has been surpassed, so to speak. So very, very positive signal there from the EIB. And now in terms of the overall financing process, that is progressing pretty well. On the debt financing side, we have made significant progress with things like structuring banks, lenders, technical advisor, due diligence reports. It's all ticking along nicely, managed by BNP Paribas. And this announcement from the EIB has actually given it even more of a boost forward. So debt financing side progressing well. Equity side also progressing well. On the equity side, we're speaking to a number of strategics who are interested in coming in at a project level with us. And that includes essentially off-takers, oil and gas companies, chemicals companies, and also financial investors, particularly climate-focused financial investors as well. So both the debt and equity side progressing pretty well, and we see a strong strategic alignment there with some of the counterparties that we're speaking to at the moment. In terms of the total financing package, we're not counting on it, but we're also seeking public financing support as well. So we have a number of public funding applications also in play at a German state and federal level, and also at a European level as well. I won't sort of reference specific schemes, but we do have applications in play. We are expecting to hear back from some of our applications that we have been working on for a long while in the not too distant future. And this would be essentially funding towards, it would be grant funding towards the equity component of the total financing package. The amounts that we're applying for are reasonably large. We believe we have a reasonable chance of obtaining some of these grants that we're applying for, and this represents really an upside in our model in terms of financing the project. So we'll be keeping a close eye on that. The team, we have a public funding team which is working very hard on that, and hopefully we'll be able to make announcements on that in the coming weeks and months. But as I said, that sort of represents an upside for us going forwards. Cris, anything to add there from your side?
Maybe a couple of things just on the EIB. You know, it's a process, not just moving forward, but you know, we've spent over a year working with the EIB to really explain the project and you know the value that it brings, whether that's socially, economically, and I think it's, you know, it's great to be recognised in that position as someone that's supporting the EU Green Deal and the EU agenda. I mean, the EIB is there to support the European Union in the way they move forward. So it's great to be recognised and obviously being aligned with what the EU Green Deal is doing. It's the same with the public funding. I think, you know, you need to be aware of what's happening in Europe, particularly with the Critical Raw Materials Act, the Net Zero Industry Act. So again, we're being worked within that ecosystem. And again, if we're recognised, it's because we are helping Europe to really deliver on those EU Green Deal.
Thanks, Cris. Now, I wanted to also talk about just a bit of a status on the lithium market as well before we move on to other things. I know there's been a lot of publicity on lithium in recent weeks and months about potential oversupply at the moment. So I just wanted to sort of present our view of the world and where Vulcan sits in that. In terms of lithium supply and demand, as we flagged quite a few times, and I think we'll continue to be flagging in the years to come, the lithium market is still a very, very small market. So it's growing, I think at the moment it's growing sort of 20-25% compound annual growth rate, which is faster than any other market I know outside of, you know, batteries and electric vehicles, which of course it's very much directly correlated to. So globally, this is one of the fastest growing lithium markets, fastest growing markets out there. But it's growing off a very small base. And what that means is that every time there's new supply or demand that comes into this market, it can create very short-term imbalances. Added to that, you have a huge influence of China in this market, and sometimes the information can be quite opaque. It creates some short-term instability in terms of pricing. So that's not going to change, and we've seen that over the last couple of years with the price going up, you know, tenfold and then back down again by, you know, circa 90%. Over the last year. It's a roller coaster, and I think it will continue to be for the next few years probably until the end of the decade, and when it will hopefully start to mature a bit. So I think we'll see these wild gyrations, oscillations up and down in the coming years, certainly until the end of the decade. Now, I think where we sit now is widely reported to be below the cost of production for many, many projects. So I think it's including, you know, a lot of currently operating projects. So some production has already been shuttered, and there's probably more to come. And then I think we'll start to see the price rising again. In fact, I think it's been ticking up in the last few days. So expect to see this yo-yo, this up and down continue. Now, with regards to Vulcan, though, where we sit, it doesn't really affect us that much. It affects us a little bit, but not very much. Why? Because we have a very, very low cost of production, which is baked in to our project. This is by design. So we have a very low cost method of producing lithium hydroxide, which is largely driven by the waste heat within the brine, which drives our adsorption process. So once we're up and running, we should be lowest cost quartile producer, and therefore we'll be hopefully pretty insulated from these swings up and down. In addition to that, we took the strategic decision to lock in offtake for the payback period, essentially for the first sort of five years or so of production. And, you know, we have offtake beyond that as well. We have taken the decision to lock in offtake with a number of tier one counterparties, Stellantis, Renault, LG, Umicore, etc. And what that means is, we have a number of price mechanisms within those contracts. We have some fixed pricing, some floor ceiling, and there is some indexation based off market prices, but that effect is moderated quite considerably by the fixed pricing and the floor ceiling. So what that means is that it's better for us, it's better for our customers. We have a lot more stability than the prices that occur on the spot market. And that's further borne out by our bridging engineering study. We published a bridging engineering study in November, and we saw essentially very little change to the economics. The NPV didn't move between the bridging study in November and the definitive feasibility study almost a year before, when prices were 85% higher. Now, we shaved off a little bit of capex, that helps, but there's quite a strong moderating effect of those offtakes on our economics. So we think that Vulcan represents a safe harbor in the lithium sector with low cost of production and these offtakes locked in with tier one counterparties, regardless of what the lithium price does in the coming years. And look, I think it's probably going to start going up again. It's probably going to start ticking up again, but it will be a wild ride in the years to come. So we need to be ready for that. Cris, anything to add there from your side?
No, well said.
Great. Okay. Now, I just wanted to, I'll actually bring you in on this one, Cris. Just wanted to talk about our optimization plants. We officially opened the first one end of last year, and that's been in the commissioning phase ever since then. These are essentially training tools. They follow 3 years of piloting with our technology team, and these are training tools in a pre-commercial setting. But Cris, would you be able to give an update on that?
Absolutely. We'll start with the LEOP, as we call it. It's the Lithium Extraction Optimization Plant. It's effectively our commercial demonstration plant for the extraction of lithium. We did open that last November, and it's been going well. Standard sort of cold commissioning, hot commissioning has been undertaken over the last few months. And as per any sort of industrial project, you're always going to find, some quality issues, predominantly on construction or engineering. But we have almost completed the entire hot commissioning of each of the units. Now it's about putting it all together. I think we've been stating an end of Q1 start of production for LEOP, and we're pretty much on target to do that by the end of March. It may trickle into beginning of April, but we're pretty close. So the team is working really, really hard here in Germany to basically get that up and running. So all going well. End of March. Hopefully, we'll be able to announce where we are with the extraction of our first lithium chemicals from our brine here in the Upper Rhine Valley. Its sister project, CLEOP, which is our centralized electrolysis optimization plant up in Frankfurt. It was always a little bit behind, again, by design. We need to have lithium chloride concentrate available to be able to obviously commission and operate our electrolysis plant. It's been going quite well in the last few weeks since the beginning of the year. We've actually started to install and have installed all the key packages onto our pad. Now it's about connecting and interconnecting all the remaining sort of pipe work and electrical and cables. So it's a few months behind the LEOP, again, as by design. So we're looking to start commissioning that sometime in Q2. But then by the end of Q2, the aim really is to have the CLEOP up and running and combining both plants, which would then enable us to be hopefully producing our first zero carbon lithium chemicals. So on track, exciting times. The team are working hard, always finding issues as part of an industrial project. We've got smart engineers and operators on the ground trying to move forward. Hopefully, we'll be able to announce some news in the coming weeks and months.
Thanks very much, Cris. And yeah, exciting times as well. I mean, we had done all the piloting anyway, which gave us all the engineering information for our bridging study, which we're now using as a basis of the financing. But really important for these optimization plants to start training our production teams. And I think will be an important psychological point for the company as well, as we start producing more significant volumes that we start sending to our customers in Europe. And this will be the first fully domestically produced lithium chemicals in Europe ever. And it will be the first lithium chemicals produced in this very environmentally sustainable way with net zero carbon footprint overall. So yeah, very, very proud of this milestone. And I think, as Cris said, with the first stage sort of only a few weeks away, very, very excited about that. So hopefully Q1, and we'll if it spills into Q2, so be it. But we'll try and keep it for Q1. That was that on LEOP and CLEOP. So we'll keep you obviously informed there and in the loop there. I also want to just touch base on the project pipeline as well. So we're very focused on phase one. I'd say 95% of the company's focus is on phase one, on the execution, on the financing, and making sure that gets executed very efficiently. But we also have a large project pipeline progressing in the background as well, and our team is also working on that. So that's something we hope to update our investors on in the coming weeks and months. We have some exciting potential there. We have a very large lithium and geothermal resource in the ground, and we have some customers who want a lot of renewable heat, which we think could very much enable the next phases of production, and potentially enable them to be cheaper than phase one as well. So this is across the Upper Rhine Valley. There's lots of industrial regions here. There's lots of large heat customers. Can't say too much more than that yet. Obviously, some of the offtakes we have in place, for example, in the city of Mannheim, are already public, but hopefully we'll have some updates on that soon in the coming weeks and months. And in the meantime, the team is continuing to work on those in the background, and really to progress the next phases of production, both from geothermal, renewable energy, and lithium. I'll stop there. I wanted to leave lots of time for Q&A. I think some have already come through, so I'll address those. And the first one came through via email, so I'll just go to that. There was a question from Pula. How many more funds does Vulcan need to secure before the start of phase one construction? What sort of funding sources are being considered? That was the first question. Well, as I mentioned earlier, Pula, this relates to our current phase one debt and equity financing. We are aiming to raise these funds at the phase one project co level. It's about 1.4 billion euro capex plus financing costs. And BNP Paribas is currently leading that process. So that's essentially, we need to secure those funds before we start construction. And our project execution timeline is really dependent on securing those funds. So if the financing takes longer, the start of construction starts to move to the right as well. Albeit, there may be the ability to get some release of funds sooner, and have some sort of limited notice to proceed with the project execution. So we'll be watching that situation very closely, watching how long the financing takes, and hopefully keeping to that timeline as much as possible. The next question was, if all goes well, how long would it take to complete and commission phase one? Regarding the project program, what is the time frame the organization is working towards? Well, it'll take essentially until 2026, according to our timeline that we published with the bridging study. There'll be a ramp-up phase, which we've also put out in the bridging study as well. That takes, correct me if I'm wrong, Cris, about 18 months.
Correct.
So there'll be a relatively conservative ramp-up period to get to full production. And as I said, that start of production is obviously contingent on getting the financing away in time, which so far is progressing well. That was that from the email questions. In terms of Q&A with the function here, just bear with me a second. What exactly did you enhance? Sorry, there's no name with this one, but what exactly did you enhance to optimize the extraction process, and what are the costs per ton lithium salt? I assume this relates to the adsorption process. But really, it comes down to, without sort of giving away the specifics, but this comes down to some of the material science behind how the adsorbent is made, but also how it's operated as well. And this comes down to, over 3 years of piloting now with our pilot plants at our geothermal plants and other geothermal plants in the region as well. Testing in a live environment on this brine. So you optimize the material itself, and you also optimize the process to extract the lithium salt. The cost per ton lithium salt, that's a good question. We have a cost per ton for the overall lithium hydroxide production process, which, as I said, is lowest cost quartile. It's just over 4,000 a ton. Cris, you don't happen to have that data, do you?
No, but I mean, we produce a 40% lithium chloride concentration. So, and the upstream is slightly more expensive in terms of its overall capital cost. So you could assume, probably just over half or 2/3 of that cost of production you just mentioned, Francis.
Thanks, Cris. The next question was from...
Just on that question though, Francis, I mean, it's probably important to note there are parameters in which we've enhanced on. That's based on capacity, how much can you load the sorbent, and obviously loading sorbent with more lithium means that effectively you should have more efficiency. And when it comes to ADLE versus other sort of legacy methods of extraction, it really is about that efficiency. So, we've seen up to 95, 96% efficiency in the extraction of our lithium. So, I mean, they're two, classic parameters. The selectivity of our sorbent on our brine is another big part. So we don't take too many impurities through the process, which simplifies our downstream processing as well. So a number of those are all tweaked as part of our sorbent design to obviously simplify and have a high efficiency of extraction.
Thanks, Cris. And also, well, I'm not the chemical engineer here in this call, but I think it's fair to say we've seen really dramatic improvements in the performance of our adsorbents, even over the last year with the piloting, and we continue to see improvements. So this is the advantage of having this technology in-house. You can buy it off the shelf. There are vendors out there. There are multiple vendors out there who will sell lithium extraction adsorbents, aluminate-based adsorbents. You can buy them off the shelf, but if you do so, then you lose the ability to optimize for your particular brine, and you lose the ability to learn and have that virtuous feedback loop between, operations, pilot, lab, adsorbent, and back to operations again. And we have that, and I think we'll continue to see improvements, right the way into getting into production and ramping up commercial production from there. And, we'll continue to work on next generation adsorbents and making this better and better. And this is an asset within the company. This is knowledge that we can take not just elsewhere in the Upper Rhine Valley, but elsewhere in the world as well. So I think we're very happy with the strategic decision to take this in-house, and I think this will be a real asset for Vulcan and Vulcan's shareholders going forwards. The next question was from Irene. What is the water source for the electrolysis process? Well, it comes from the lithium extraction plant, right, Cris?
That's right. As mentioned before, it's a 40% lithium chloride solution. So it has 60% by weight water. So we have that as part of the overall feed to the electrolysis unit. And more importantly, we have major recycles within the actual electrolysis and the central lithium plant. So we're constantly recycling our water. We use a very low freshwater makeup, just over a ton net of products. So we have a very low use for fresh water within both the extraction process and the conversion process.
And this, just to give context as well, this means that we won't just produce the lithium product with the lowest carbon footprint in the world, net zero or net negative carbon footprint, but also with by far the lowest water footprint in the world. So we're really talking orders of magnitude lower than current water footprint of production, because once again, by design, we've built in this feedback loop. We built in these closed systems with the water constantly being fed back around that integrated project. The next question, what is large in terms of resource source in numbers? So we have modeled across some of our license areas, we've modeled around about 26 million tons contained lithium carbonate equivalent in the Upper Rhine Valley. There's many licenses that we have not modeled yet, so we can expect our total global resource in the Upper Rhine Valley to be considerably bigger than this, but I think it's already large enough to essentially mean that the Upper Rhine Valley contains a world-class lithium resource. It is not constrained by size, and it means that having executed phase one, you can continue to print and repeat and grow production in a fairly modular fashion, and hopefully get learnings from the first phase as well to make sure that further phases are hopefully cheaper and more efficient. Saranga says, hi Francis and Cris, how likely will the project be financed without issuing more shares? Well, all I can say, Saranga, is I'm very incentivized not to dilute shareholders more than I have to. Obviously, I'm still the largest shareholder. So I really have a target, and the company has a target to issue as few shares as possible by the time we get into production. And I think I'm on record as saying that our internal target is really to sort of limit that to around 200 million shares by the time we get into production. But that's a target, I caution there. Look, we're trying to raise the debt and equity at a project co level. That seems to be progressing well so far. That's the strategy. And that's to limit dilution in Topco. That said, we're not making profits at the moment. We're making small amounts of revenue, but obviously no profit. And it will be some years yet before we start generating significant profit from phase one. And we also have to look to things like the project pipeline. Once again, it would be great to fund as much as possible of that at a project co level, but we might have to spend some from Topco. And we've also got the technology arm of the business as well. And obviously, corporate costs added to that. So I can't say we won't raise more at Topco. Whenever we do raise as much as possible, we want to be aligned with our investors that we bring in. So really be in it for the long haul with investors that come into Vulcan. And we'll try and limit dilution to existing holders as much as possible. And as I said, that phase one financing is aimed to be at a project level. So that's our target, and I think it's achievable, and we'll continue to work towards that. Russell asks, can you indicate the interest rate on the debt? Well, it's not finalized yet, Russell, but we're looking at, I think, approximately 7% or thereabouts, based on the feedback that we've had in the process so far. But obviously, it's a work in progress. And then Russell also asks, what is your view on an outside interest making a bid to buy the entire company? Well, hopefully that doesn't happen at the moment. I think we're very undervalued considering what I put on the first slide when we started this call. Look, I don't think that's something that's on the horizon at the moment. We're not certainly not courting that interest, and we're looking to really work together with larger strategic partners, but at a project level. The next question was, one of the recent AFR articles, it mentioned Vulcan looking to raise 1.8 billion euro, but Val previously said they need to raise 1.4. Which one is correct? Well, 1.4 is the capex amount as we calculated in the bridging study. On top of that, you also have financing costs as well, and some other costs as well, and other contingencies which are built in when you do this financing process. I'm not sure, Cris, if you want to add to that, but I think the 1.8 figure is not finalized, but it's probably closer to being accurate in total.
Yeah, no, that's about right. I mean, the 1.4 was a clear capex number, but as you move through the beginning of the ramp up, and as we mentioned, that's an 18-month period. you do need to have some financing costs as you get to full production. So that, coupled with all the other banking related costs, is the other 400 million at this point. But that's not finalised, and as we go through the finance process, we'll refine that.
Thanks, Cris. Next question was from Stefan. Do you still have an offtake with VW in place? Yes, we do. Yeah, nothing's changed there. Morris asks, great progress with Leop and Cleop as well as financing. Thank you. Why do you see the Vulcan share price under continued pressure? Well, I won't put it up on the screen now, but we recently had someone send us the Vulcan share price against Ganfeng, which is one of the largest lithium producers in the world, and also against the lithium pricing sort of basket from the markets. And we have been tracking Ganfeng's share price almost 1-to-1. So we seem to be, I think it's an overall lithium market sentiment is my read of that in terms of share price going up and down recently. And we also recently, at least, we're tracking the lithium pricing very closely as well. So that tells me that we're being bought and sold with the overall market, and we haven't sort of decoupled from that. Hopefully, as we continue to execute and we continue to do what we said we were going to do, hopefully we start to decouple from that and we become more sort of masters of our own destiny. And I think we need to talk more widely about how we have a low cost of production and how we have these offtakes with the pricing very much baked in, so that we are somewhat independent, not entirely, but somewhat independent of what happens with lithium pricing on the wider market. So that's something we'll have to keep on emphasizing. But hopefully we'll start to decouple and be masters of our own destiny more going forward as we continue to execute. Thanks, Morris. Question on when does first drilling commence? Well, when we've started, or when we've completed the financing. So we have existing wells already in production as part of our operations in the Landau region at Insheim. And those will continue to be in production and will be used as part of phase 1. So the first wells already exist. Now we need more wells, and we have some of the sites already in various stages of preparation. So some preparatory works have already been conducted at our next production site. That's basically ready to go, but we won't start drilling new production and reinjection wells until the financing is completed, because that's part of the phase 1 capex. Suranga asks, once in the drilling phase, how many wells do you need? Also, how long will this drilling take, and will you be able to finish these within the time frame? So, Cris, I might tag you in for this one. That's all right.
Sure. So we're drilling 24 new wells. As mentioned by Francis, we already have 4 wells in the ground, 2 producers, 2 injectors at our local sites at Insheim and Landau. We're going to grow that brine production to circa 950 litres a second. That's what we need to basically produce our total lithium requirements. Starting mid-year, we have circa a 2.5, 3-year program to basically drill out all the wells. The good thing is that we don't need all the wells to start production. We need enough brine to basically start up the lithium extraction machine. So we believe we're going to have more than enough wells in the ground by that point to basically start and ramp up our overall ramp up of production. So by mid-2026, which is when we're expecting to start up the lithium extraction plant, we should have well over 450, 500 litres of brine and hopefully complete the remainder of the drilling over the next year.
Thanks, Cris. And also on the subject of drilling, the next question is from Ulf. You plan to drill 26 wells with 2 drilling machines. What duration do you expect for each 2 wells to be drilled? Once again, I'll bring you in here, Cris.
Yeah, it's 24 wells, and it's important to note, I mean, that's a base case assessment, the 24 wells. The reality is we may see much more positive drilling and even the brine flow. So we've got quite a flexible field development plan. I think we've been pretty good at explaining that within the bridging phase study. So we may find that there's higher flows and therefore need less wells, so we would reduce our capex. In terms of timeline, though, we've got a pretty conservative timeline for drilling. We always take a worst case scenario whenever we get to a new well site. We call that a P90 outcome, and that may take circa 150 days to drill that well. Conversely, by the end of that program, or by the end of that drilling campaign at that well site, you might be down at sort of 60, 70, 80 days. So we sort of take an average of the number of days throughout the entire 24 well program. That's how we've estimated the total duration.
Thanks, Cris. Next one was from Dennis. Where can I get a Vulcan baseball cap to spread the word? Dennis, please contact our investor relations department. But thank you for the support.
I'll have one as well. That'd be good.
Thanks very much. Alicia, could you give us an idea of the mix of price mechanisms in your offtake agreements? Does the lithium price affect how many of your affects any of your financing discussions progress? Well, as stated, it is a mixture. I can't specify which one's which. I can say that we have some fixed pricing, some with linked to market pricing, but with a floor and a ceiling to give it more stability for both parties. And some sort of entirely linked to a contract pricing index with a market provider such as Fast Markets. So I can't break down any more than that, unfortunately, because it's in commercial confidence. But what I can say is that it does offer a lot more stability, as previously mentioned, and that assists us in the financing progress. So it's been an asset so far. Trevor, are you able to shed any light on a best case, worst case project equity raising from share issues? Thanks, Trevor. Well, it's a difficult question, really. I mean, I think we just have to put our best foot forwards and see where we end up. I mean, so far so good, I think, with the equity discussions. Yeah, I wouldn't be able to sort of unfortunately sort of say what is a worst case scenario or a best case scenario. I mean, we are looking to raise 50%. We're looking to sell down 50% of the project equity or thereabouts in return for the equity part of the capex, essentially. So that's our target. And I think discussions towards that are progressing very well. So we'll keep you posted on that. But yeah, so far so good. Another question on takeover offers, same response. No, we haven't had any takeover offers. We would have had to announce them, so you would be the first to know if we did, but we're not looking for any at the moment, obviously, given the low share price. And how likely Exxon becomes an investor here? Well, we know Exxon is active in the space of adsorption type direct lithium extraction in the Smackover in Arkansas, and we maintain a close dialogue with them as fellow travelers in the lithium space. And good to see oil and gas moving into sustainable lithium. Dominic, is there a preference on the type of government-backed funding, i.e. a preference for export credit or development-backed loans over grants? Well, Dominic, good to hear from you. Hopefully we get both. I don't think it has to be one or the other. Obviously, the ECA-backed financing means that you can still bring in the commercial banks, but it's ECA guaranteed, so it means you get a lower cost of capital. And you know, something like the EIB typically provides concessional lending as well. So I think we can end up with a favorable cost of capital from that, and then grants obviously help with the overall mix and probably take off some of the equity side of things as well. So it doesn't have to be one or the other. I think there's definitely room for a mix of all three. There's a question on any plans for Vulcan to scale up production of Vulsorb and availability of Vulsorb for any other locations like Salton Sea in plans for testing. Look, we're using a producer in France to produce Vulsorb, an existing toll manufacturer, and we are looking at other potential locations to manufacture Vulsorb as well. I wouldn't comment on specific geographies, but suffice to say we're receiving interest from multiple different continents, including North and South America, for the application of Vulsorb. And it has been unsolicited so far. So we're really looking at as a medium-term goal of capitalizing on that interest as a technology company as well. I'll just have to scroll. I might have to miss a couple of guys in the interest of time. I'll get to as many as I can. I think some of them we've already answered anyway. And please, if you can provide your name, we can also try and get back to you afterwards with any answers to any questions we don't get to. There's a question on market cap in the Vulcan's market cap in the future. Hopefully we see an appreciation there as we execute on the financing. I think that's one of the main points that's holding back the valuation of the company. So the phase 1 financing, but I think we also have other catalysts in there in the nearer term, producing first lithium from the optimization plants, for instance, updates on the financing along the way. So hopefully we'll see an appreciation there. Hi team, so many job offers advertised by Vulcan. How smoothly is that progressing? Are you still receiving protest against the project? We haven't received any protests that I'm aware of. We have a very, very good relationship with local stakeholders, and we've seen very strong votes in our favor at a local level recently. So I'm sure we can't please everyone, but I think we have very, very strong support locally. In terms of job offers, that the hiring process, the recruitment process is I think progressing pretty well. I'm not sure, Cris, have you got anything to say there?
I mean, I think proudly we receive a lot of CVs from people that want to join the company. I think it's almost the opposite. We again, we have unsolicited senior people from large corporations who would like to be part of the Vulcan journey. So that's one thing we've never had a problem with, is recruiting talented people and talented leaders. So I think that's something we continue to see. And I agree regarding the protest. I think it's quite the opposite. We're seeing an incredible support from our communities. Almost the social license to operate can be seen by the voting that's happening within the municipalities and at the town level. So I mean, only recently there was a vote to sell the land for our lithium extraction plant, and received 41 out of 44 in favour of Vulcan. So I think that speaks quite loudly the support we're getting from our communities.
Thanks, Cris. I'll bring you in for the next one. Are 2 drilling rigs enough, or do you have more rigs being built?
It's a good question, Russell. We could have 4 rigs and it may not be enough. The reality is it's how much do we need for when. So the 2 rigs do get us to where we need within our project development. If there's a reason to accelerate because we want to have a rig elsewhere within the project portfolio, we may consider that in the future. But for now, phase 1, 2 rigs is enough to support our program.
There was another question with respect to new share issuance. You said we would be looking at a maximum of 200 million shares before production. Guys, I want to be very clear. I can't and we can't promise that we will be looking at a maximum of 200 million shares before production. I said that's a target that I myself have as obviously as the largest shareholder, to try and limit the dilution. But look, we have to take it as it comes. As I said, we're not a profit-making company, so we'll just have to see how that progresses. But obviously, the intention here is to limit the dilution at Topco as much as possible. Beyond that, unfortunately, we can't make any promises because it will depend on how the phase 1 financing goes, and I guess how the market reacts as well as we progress. There's a question. How's the new executive arrangements going with Cris, the CEO, and Francis as executive chairman? Cris, how's it going?
I'm pretty happy. I think strong working relationship between Francis and I, and in some respect hasn't changed since the previous arrangement. But I think clearly we've got our own roles and responsibilities. We understand who runs the executive team and who works with the board. So they're pretty well at the moment. And you, Francis?
Yeah, likewise. I think it's working very well. Yeah, very, very happy to have Chris's expertise on board, and I think he's doing a fantastic job so far. I'd also mention as well that it's not just us guys. There's Cris has built out an excellent leadership team underneath him. So we've got some very, very high quality individuals at that leadership level, both in Australia and in Germany on site, and experience from BASF, Worley, etc. Some really experienced individuals in production, operations, execution. So very happy to have that team, and very happy to have Cris leading that team. I think it's probably enough for 2 more questions, let's say, and then I think we'll have to hold that there. How did Germany view this project? Do they see this as strategically important to Germany and the EU? Given Germany going through some sort of recession, will that be affecting the potential support for it? Do they have any financial support for green projects like Vulcan? Well, a lot of questions there, but I think state and federal governments view the project very positively. We've had public statements of support for what we're doing at a very high level. And we've had some very high profile visits to our site as well, I think, to show that support. Clearly, lithium is a critical raw material for batteries going into EVs. The auto industry as a whole, globally, and Europe is no different, is transitioning to electric. The auto industry is the largest industry in Germany, and lithium is therefore the lifeblood of German industry and the auto industry going forward. So I think this is widely recognized. And given we're developing Europe's largest lithium resource, and certainly Germany's largest lithium project, I think it is viewed very, very positively, notwithstanding also the sustainability credentials, etc. as well. So I think we have very, very strong support. And as I said, we are applying for support schemes as well, and hopefully more on that in the coming weeks and months. And then I think I'll have to make this the last question, sorry, and then we'll have to circle back with any questions we didn't get to. You mentioned the opportunity of applying your technology in other international projects. Would you consider licensing the technology in this context? Yes, that is what we are looking at, Pamela, so thanks for that question. Guys, I'm going to have to end it there. There were some questions I didn't get to, apologies for that, but we have a hard stop. Thank you very, very much for your time, and we'll keep you informed, and hopefully there'll be some exciting progress in the weeks and months to come. Thanks everyone.